Happy Friday, everyone. Thanks for joining us today. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. More people found jobs last month, with the number of newly employed climbing by 300,000 in March. But things are still looking rough for young job seekers in the country. Japan is in heated debate over its negative interest rate policy, while the International Energy Agency expects the global oil glut to ease in the second half of this year. We take a look at some of the global business stories that made headlines this week. But first, Korea and Norway held summit talks here in Seoul for the first time since President Park Geun-hye and Norwegian Prime Minister Erna Solberg took office. The two leaders agreed to upgrade cooperation in trade and other sectors that look to hold promising paths for the future. Here's our presidential office correspondent Song Ji-sun with details.
Holding summit talks at the presidential office of Cheongwade on Friday, President Park Geun-hye and Norwegian Prime Minister Erna Solberg agreed on ways to diversify trade items and boost investment between the two countries. The pact with EFTA, or the European Free Trade Association, that includes Norway, Switzerland, Iceland, and Liechtenstein, those that are not part of the European Union, was Seoul's first free trade deal with a regional bloc. Since the agreement went into effect in 2006, the bilateral trade volume has quadrupled over the past decade to a record high last year, despite the slowing global economy. Shipbuilding has been the key in that mutual growth, with Seoul building Oslo's vessels and planned orders for material shipped from Oslo. While vying to boost support in shipbuilding, the two sides also agreed to diversify trade items, as ships accounted for over 90% of Seoul's exports to Oslo, and ship parts over half of Oslo's exports to Seoul as of last year. The two will also launch collaborative research into eco-friendly energy and look to establish a seaway in the Arctic. After nearly 6 decades of diplomatic relations, the two leaders focused on sealing practical agreements at this year's summit, while also touching upon global agendas like climate change and sustainable development. Song Ji-sun, Business Daily.
Korea's job growth seemed to be picking up pace last month, ending a 2-month slowing trend. But there's a gloomier side to the latest figures, as the youth unemployment rate remains stubbornly high. Our Hwang Jae reports.
Korea saw a slight lift in the country's overall job market. Statistics Korea says the country added 300,000 jobs in March from a year ago, putting the total number of employed at around 26 million. Job growth had been slowing for the previous 2 months. But the general pickup is not welcome news for all. The youth unemployment rate reached 11.8% last month, posting a record high figure for the month of March. Still, the agency cautioned against too much skepticism, explaining the lofty figure has to do with more people looking for jobs.
To get employed, people have to enter the job market. So naturally, unemployment rises as the employment rate among the younger generation climbs.
The employment rate of those aged 15 to 29 did rise 1 percentage point to 41% from the same period last year. But the double-digit jobless figure for the young is still worrisome, especially as it peaked at 12.5% just a month before, marking the highest ever. And facing such sluggish figures, the government will lay out new measures later this month to boost jobs for young people and women. The focus, experts say, should be on removing excessive regulations.
So there's no really solid answers for this, but I think we really need to get rid of the unnecessary regulations in the market, especially the service sectors like education, legal sectors, and medical sectors, to create high-quality, decent jobs.
The researcher adds a social consensus that puts youth unemployment at the top of the country's priority list is a must, as job sharing looks to be the key solution during times of slow demand at home and abroad. Hwang Jae, Business Daily.
China's economy grew at its slowest pace in 7 years in the first 3 months of the year. But its stimulus measures might be bearing fruit, as other major economic figures also released today beat market expectations. Ari Kim Min-ji tells us more.
China's GDP growth rate in the first quarter fell to its lowest level since the global financial crisis.
According to the preliminary calculation, the gross domestic product came to about $2.5 trillion in the first quarter, up 6.7% on year, calculated in comparable price.
That's the lowest since the first quarter of 2009 when it rose 6.2%. The figure also slowed from the 6.8% recorded in the fourth quarter of last year. But the pace of expansion still falls within the range of Beijing's target of 6.5% to 7% laid out for this year. Also offering a ray of light are other economic data, signaling that the Chinese economy may be on track to regain stability. Industrial output rose 6.8% in March on year, while exports inched up more than 11% in dollar terms, both beating market expectations. Fixed asset investments, a major driver of the economy, also spiked more than 10%. China's National Bureau of Statistics noted that while major economic indicators are showing positive signs, Beijing is still in the midst of transforming its economic structure, and the downside risks remain. And it's without a doubt that growth in the world's second-largest economy has slowed. Last year, the Chinese economy grew 6.9%, the slowest in 25 years. That means trouble for countries that are dependent on Beijing for trade.
It's inevitable that countries like Korea get swept up due to its high dependence. It needs to find emerging markets that can replace China. Also, since China's product competitiveness is improving quickly, Korea will need to simultaneously work on improving its competitive edge.
A recent report says that a 1 percentage point drop in China's economic growth leads to half a percentage point dip in Korea's GDP expansion, as it puts a dent in the country's exports and corporate profitability. Kim Min-ji, Business Daily.
Fears for global economic growth loomed over spring meetings of the International Monetary Fund and World Bank Group. IMF Managing Director Christine Lagarde told reporters that economic growth is being threatened by increasing factors. World Bank President Jim Yong Kim said the weakening global economy challenges progress toward ending extreme poverty by 2030. In its latest World Economic Outlook, the IMF lowered its earlier projections for growth this year to 3.2%. The IMF had added that a British exit from the European Union would pose serious downside risks to an already slowing global economy. People here in Korea are eating less meat than others, as numbers show that meat consumption is well below the OECD average, despite a steady increase over the past few decades. The Ministry of Agriculture, Food and Rural Affairs says the country's annual per capita meat consumption was 51.3 kilograms in 2014, compared to the OECD average of 63.5 kilograms. By country, the United States topped the list with an annual consumption of almost 90 kilograms for each person. Bangladesh was at the bottom at 2.1 kilograms. Korea's meat consumption has surged nearly fivefold from 11.3 kilograms in 1980 due to changes in people's tastes and eating habits. It's Friday, and that means it's time to look through some of the global economic issues that made headlines this week. And for that, we're now joined by our Eunice Kim in the studio. Hello, Eunice.
Hello.
All right, so there's been growing criticisms fired at Japan's Abenomics, which is in its fourth year now, right? And this week, we saw some big-name supporters of the country's policies downgrading their enthusiasm.
Right, and much of that debate revolves around the BOJ's negative interest rate policy now in effect for 2 months since the middle of February. And a lot of that concern coming from not only external sources, but from former supporters as well. Take a look. This week, at a Q&A session at New York's Columbia University, Bank of Japan Governor Haruhiko Kuroda doubled down, defending his negative interest rate policy, arguing Japan's economy would be at a worse place if not for it. He was responding to a rising chorus of critics who worry the monetary experiment introduced in late January is not working. In rare public criticism on Thursday, President of Mitsubishi UFJ Financial Group Nobuyuki Hirano said the negative rate policy was fueling anxiety among households and companies. This after a day earlier, one of Abenomics's biggest former supporters, Chief Financial Regulator Nobuchika Mori, said the unorthodox policy was hurting Japan's banks, which play a vital part in the drive to prop back up the world's third largest economy. In fact, there have been plenty of indicators pointing south. Japan's benchmark topics index so far this year has struggled to regain lost ground. Even with recovery seen in recent days, it's still down more than 10% in 2016. And leading the exit are global equity investors, who account for a lion's share of trade value. Foreign money has been leaving Japanese stock markets for 13 straight weeks, the longest stretch since 1998, offloading a net 5 trillion yen in stocks. That accounts for 27% of the net 18.5 trillion yen in equities they picked up between 2012 and 2015, when global fund managers were bullish on Japan. Meanwhile, the yen, widely considered the world's safe haven currency, is strengthening, rallying nearly 11% since the BOJ announced its negative rate policy at the end of January. Money manager BlackRock is joined by the likes of Citigroup and Credit Suisse in cutting its overall outlook to neutral on Japanese shares, citing the strong yen risk and increased volatility. And while the most pressing picture may be in equity markets, economic indicators don't inspire optimism either. Inflationary pressure still hides its face. Japan's consumer prices were flat in February, wage growth remains slow, and the economy still flirts with recession.
Now, these are some big names drawing fire on a policy that's essentially an experiment. And there's also growing general skepticism about Japan's negative rate policies.
Right. There is a general debate, really, whether this is really working, because in theory, how the negative interest rate policy is supposed to work, of course, is when people or companies save with banks, they're supposed to pay the bank to hold that money. So it's designed to incentivize people to spend their money and thus get capital flowing again to revive the economy. But in most cases, banks are not passing on these added costs to their customers, so they're stuck themselves. No one really knows how this experiment will in the end play out or what the unintended consequences will be. But for instance, BlackRock's chief executive Larry Fink said this week lower rates were in fact having the opposite effect. They were forcing some people, like those saving up for retirement, to divert their spending to savings because they were just simply no longer getting the returns they used to fulfill their quota. So a plan that was meant to get people to spend is in fact causing people to freeze up and save more. And in the case of Japan, this could be a real problem because it has built-in structural risks already at play, such as an aging population and matured consumption.
A big problem indeed. But turning to other news now, in the aftermath of the Panama Papers leak, which we talked extensively about last week with you, this week tax officials from around the world met to show solidarity and address tax dodging.
That's right. So this meeting took place in Paris on Wednesday and was to bring together tax officials from as many as 46 countries, which belong to the OECD's Forum on Tax Administration. The meeting was organized by the Joint International Tax Shelter Information and Collaboration Network and was described as unprecedented in scale as member countries worked to share information on the leaked documents as well as clear the way for a collaboration in data analysis. Now, while some countries opted to stay under the radar in their participation, Korea's National Tax Service confirmed its attendance and said it will take a lead role in data analysis. You'll remember last week's Panama Paper revelation amounted to more than 11 million documents that named some high-profile owners of offshore accounts, including direct or indirect connections to Iceland's Prime Minister, UK Prime Minister David Cameron, and a member of FIFA's Ethics Committee. And before I go, an upbeat report from the International Energy Agency says an oil rebalancing is on the horizon, specifically in the second half of this year. In a report issued Thursday, the OECD agency said it foresees the globe's oil surplus to be cut noticeably from the current daily 1.5 million barrels to 200,000 barrels a day in the third and fourth quarters. You see the graph there. It attributed to growing evidence that U.S. shale output declines were in fact accelerating, and the fact that Iran's crude exports were not as large as expected due to financial obstacles. The report comes ahead of a meeting between OPEC and non-OPEC countries in Doha this weekend to address production levels.
We'll definitely look forward to what comes out of this meeting over the weekend.
Absolutely.
Thank you so much for coming in today, Eunice.
You bet. Happy weekend.
And that wraps it up for today and this week. Hope to see you right back here next week with more business news that matters to you. Thanks for watching and have a great weekend.